Social economic accounting is still new phenomenon in accounting science and is often interpreted as the same as social accounting associated with national income accounting. According to Ahmad Belkawi, in his book on socioeconomic accounting, he stated that social economic accounting arises from the application of accounting in the social science. It concerns the organization, measurement analysis, disclosure of economic and special effect of government and corporate activities. These include micro and macro activities. At the macro level, aims to measure and disclose the economic and social activities of the country, including social accounting and reporting the role of accounting in economic development. At the micro level, it aims to measure and report the effect of companies' activity on its environment, including financial, managerial social accounting, and social auditing. Drivers of the emergence of social economic accounting. There are two main reasons why this social economic accounting is important. The first is tendency toward social welfare. The state cannot exist on its own without the participation of its people, nor will the company progress without the support of its customer and its social risk environment. This fact is increasingly realized and increasingly require accountability. The second is tendency toward environmental awareness. Environmental paradigm that underline this reason state that the view that humans represent only one among many species on Earth, that human activities are determined by the environmental as well as by social and cultural factors, and that humans are strongly dependent upon the environmental and its resource. Concept of social economic accounting. Some of things expressed are as follows. In environment, we have pollution, prevention of environmental degradation and conservation of natural resource. In energy, we have energy conservation and savings. In fair business practice, we have requirement of minority employment and upgrading of their skill, use of women as employees, and accounting of overseas business unit. In human resource, we have employee health and safety, and also training. In community involvement, we have neighborhood activities and health. In assistance, we have education and art. And the last, in production, we have production safety, reducing pollution, and poisoning. Company and corporate engagement. There are several models and trends regarding corporate involvement in social activities. Throughout the satisfaction research, there are three views or models that describe corporate involvement in social activities. The three models are as follows. The first is classic model. There is one and one only responsibility of the company, which is to use its wealth to increase profit as long as in companies with the rules of the game that apply in a free competitive system without fraud and cheating. Clearly, companies, according to this view, don't need to think about the social effect of the company and do not to think about effort to remedy social ills. That is not the business of the business, but the business of the government. The second is management model. According to this opinion, the company is considered a permanent institution that lives and has its own goal. Manager as the people trust by the owner of the capital, but also those who are directly involved with the life and death of the company manager as a team responsible for the survival of the company are forced to choose policies that must consider corporate social responsibility given the dependence on other parties. The third model is social environmental model. This model emphasizes that the company believes that the economic and political power it has a relationship with the interests of the social environment and not just from the market according to the theory or classical model. Bershaw suggests that there are three forms of corporate social responsibility, namely as follows. The first is corporate philanthropy, where the company responsibility is limited to the generosity or willingness not to reach its responsibility. This form of responsibility can be charitable activities, donation, or other activities that may not be directly related to the company activities. The second is corporate responsibility. Here, the accountability activities are already part of the company's responsibility, either because of the provision of the law or part of the company willingness or willingness. The third or the last is corporate policy. The company's social responsibility is already part of its policy. Measurement in socioeconomic accounting. This measurement problem is a very complicated thing in socioeconomic accounting. In conventional accounting, it is very clear that every transaction can only be recorded if it affects the company's financial position. In socioeconomic accounting, we must measure the positive impact and negative impact caused by the company activities. Usually, this positive and negative impact can be calculated because the transactions are uncompleted cycles, non-repetible, and have not affect the company financial position. Guidelines for measurement are made, such as environmental damage, air pollution, and water pollution. The economic loss of polluting material is estimated using this following formula. Q represents the loss due to pollution, P represents the production in dollars, N represents the economic life of the material assessed based in its use, F is weighted average factor as percentage of material that cause air pollution, R is labor factor describing the value of material used and the value remaining. The harm done to the soil by the pollution is calculated by the formula. L represents the land damage, Q represents the value of polluting material as the part above the formula, V represents the land interaction value per year. Reporting the socio-economic accounting. To report the socio-economic aspect caused by the company, there are several techniques for reporting this socio-economic accounting. For example, Deloitte in 1997 reveals the technique as follows. The first is disclosure in a letter to shareholder, either in an annual report or other form of report. The second is disclosure in the notes of the financial statement. The last is made in additional estimate, for example, through the existence of estimate for allowance for site limit, environmental maintenance costs, and ADC.